If you all remember, 6 months ago, I did a video on T-bills on why I started buying them again. So the 6 months have passed, my T-bills has expired and has been returned to my CPF account. But the thing is, I did not subscribe to the new T-bill. And in fact, if you look at just the most recent T-bill results, we are looking at 3.4% per annum on the cut-off yield. Now, this is based on the recording date, which is on the 7th of August. So by the time you watch this video, maybe the new T-bill got new yield already. So you see, 3.4% per annum, so low. How can? Which is why I'm here to do this video and also suggest some alternatives. But if you have even better ideas, or if you want to suggest you have further questions, then come and join us at our over 16,000 members Telegram group at Honey Money SG to discuss your ideas. So I will talk about some of these cash savings alternatives that you can look at with your cash, your CPF or your SRS, depending on what you use to fund T-bills. Firstly, let's talk about cash, right? Because cash is the most versatile asset. And even if you look at one of the most popular choices like Syfe Cash Guaranteed, as of the recording date, it has dropped to 3.5% per annum. Wow, you know the last time I record Syfe Cash Guaranteed is like 3.7%. Now it really follow T-bill, you know. So very sad, 3.5% is really very low. I will not suggest them for now. So the next option, we can look at Chocolate Finance, which is giving 4.2% per annum on your first $20,000. And I know you are very worried about Chocolate Finance again. Some of you even make fun of their name, like Chocolate is such a not serious name. I've heard these comments like over 1 year already. So if you're scared, don't use Chocolate Finance. And if you're using Chocolate Finance, then don't be scared. At least this company has the real MAS Financial Advisors license and Capital Market Service license, you know. So it really depends on your risk appetite, but I think 4.2% on your first $20,000 and you get back the returns daily after midnight, I think it's a really convenient solution. And whether it's suitable for you or not, I cannot advise further. But if you want a safer option with no limit, not like your first 20,000 nonsense, then you can look at OCBC Premier. Specifically, the OCBC Premier Dividend Plus accounts, which is only exclusive for OCBC Premier customers and above. Because you see, the 3.3% per annum will be applied on your entire bank account balance in OCBC Premier Dividend Plus account. And the only condition is that you need to make a monthly deposit of at least $3,000 plus 0 withdrawals. So if you fail any of these conditions, you will not get 3.3% per annum for that month. So for those of you who are interested to sign up for OCBC Premier, I also have a referral link to sign up where my RM will contact you. So you can fill up this form if you want to sign up. The other alternative for cash, you can look at money market funds, which is actually offered by a lot of these trading platforms. Like for Tiger, they have Tiger Vault giving you 6.8% per annum. Moomoo, they are also giving welcome rewards for new users, 6.8% per annum. And if we look even further, Poems is giving 5.9% for the Cash Plus account for new users as well. But if you want an even higher return number, you can look at up to 7% per annum on Webull USD Moneybull. Because do you know that Webull is one of the most competitive platforms for options trading? And here are 3 features of Webull options trading. Number 1, low commissions. Webull is charging 55 US cents per options contract and 0 platform fees for US options trading, one of the lowest fees in the market. Currently, there is an options trading promo that waives commissions for certain options traders, which I will share more later. In addition, you can trade options with 0 contract fees, 0 assignment or exercise fees, and no minimum deposit. Number 2, US market index options. Other than individual US stocks, you can also trade options on major US indices like Nasdaq 100, S&P 500, and Dow Jones. Compared to individual stock options, index options offer broader market exposure and diversification, reducing the risk associated with single stock volatility, while providing similar benefits like leverage and income generation. Number 3, options learning. Webull provides a learning platform that helps beginners understand options trading. Webull Learn offers engaging educational content that covers frequently asked questions and popular options strategies. For new to Webull users, there are welcome promo rewards. Fund a minimum of $2,000, complete 3 US buy trades and maintain until 30th September 2024, and you can get $60 of cash vouchers. If you fund minimum $10,000, complete 5 US buy trades and maintain until 31st October 2024, you can get $400 worth of cash vouchers. And if you fund a minimum of $100,000, you can get 1.84% per annum USD Moneybull interest booster for 90 days, capped at $100,000 subscription. And this reward could elevate your USD Moneybull interest to up to 7%. There is also an options trading promo for both new and existing users, where if you trade a minimum of 100 US options contract monthly, the fees will be reimbursed when you fulfill the criteria. Also, Webull does not charge platform fees. Start trading with Webull by using my exclusive link or scan the QR code right here to get your Webull account today. Okay, so we completed the cash strategies on where you can put your cash after this T-bill very bad results. But how about for CPF then? Because CPF is much more limited, right? And especially for myself, I've used my CPF for the previous T-bill and then now it expired. So I guess the first alternative you can look at is fixed deposit. And oh my God, why am I even suggesting fixed deposit? But if you look at OCBC, as of the recording date, it is offering a time deposit rate of 3.1% per annum for a tenure of 5 months. And this time round, you don't need to queue at the banks anymore. You can just apply for it digitally provided you have the CPF investment account. And the good news is, you can now place an SGD time deposit with your CPF ordinary account funds even if your CPF investment account is with other banks. So make no mistake, even if your CPF investment account is with DBS or UOB, you can still apply for this fixed deposit CPF. But 3.1% per annum doesn't sound very enticing for a 5-month tenure. It's just barely breaking even considering the fact that you have opportunity cost when you withdraw funds out of your CPF OA. But if there's no better alternative for your CPF funds, then why not? If you have the risk appetite, you can use it to invest. And where can you invest? Specifically, if you are into the US stock market, then you can look at a money prime US fund, which you can buy it via Endowus platform. So this fund will track the top US companies and it can be funded with your CPF OA. And recently I did a video on my best way to invest in S&P 500. Some of you asked me why I don't use my CPF to invest in iShares US Index Fund. Now the fact is, you cannot use CPF to invest in iShares US Index Fund, but it can be used for a money prime US fund. So it's a pretty cost-effective way if you want to use CPF to invest in the US stock market. But bear in mind, it comes with its own risk and it's definitely very different risk profile compared to T-bills. So do your own due diligence and your own research, not financial advice. Lastly, let's talk about SRS. If you use your SRS funds to subscribe to T-bills earlier, now that the T-bills have been refunded, then where are your SRS funds going to go? I guess the best alternative for SRS funds is that you actually lock in a 10-year period with the Singapore Savings Bond, because it is now giving you 3.1% per annum, and 3.1% per annum is for the entire 10 years, okay? Not like 6 months T-bill, only 3.4%, such a joke. The good thing about SSB is that it's really the similar risk profile compared to T-bills. It is backed by the Singapore government, which means extremely low risk, and it's really suitable for people who are near the retirement age because they may not be able to stomach the stock market volatility and taking high risk in other kind of assets. The only limitation is that SSB has a combined cap of $200,000 whether you are using cash or SRS funding. So if your SSB allocation is already $200,000, you cannot add in new funds. Then how if you don't want to invest in higher risk assets? There's an alternative, right? Which is money market funds via Endowus, and you can look at Fullerton SGD Cash Fund offered by Endowus platform as well. Now, most of you know that this Fullerton SGD Cash Fund from other trading platforms, you can use your cash to subscribe to it and then get like all the promotional returns, but many of you may not know that Endowus actually offer it as well. And the fact is, you can use your SRS to fund it. For the past 12 months, the Fullerton SGD Cash Fund has given more than 3% per annum of return, and it's a fairly low risk money market fund as well. And take note that Fullerton SGD Cash Fund is an investment. It is not a cash account. It's not a savings account. So your capital is not guaranteed one. Just that it's fairly low risk. Then you can use my referral link at Endowus to sign up as well to get $20 of cash credit, which can offset your Endowus fees. So to sum up, this video is really not financial advice. I will just provide you the alternatives that you can look at, especially after the T-bill use has been going down to 3.4% per annum as of the recording date. So you may be really busybody or kepo about what I did with my 6 months T-bill of $30,000 earlier. So I actually split it into 2 parts of $15,000, and I chose the second option, which is to invest in a money prime US fund using CPF via Endowus platform. And I did it via 2 lump sum transactions, one with a value date of 25th of July and one with a value date of 30th of July. And that was even before the August market correction happened with the Japan carry trade and the war escalation and all this. Such a bad timing. But nevertheless, we should always look at investing for the long term because we can never time the market. And why did I not put into T-bills again? Because I felt that the era of high yield T-bills may be coming to an end. You see the US Federal Reserve always trying to signify that they are going to cut rates, but they haven't even cut yet as of the recording. So it's just an early preparation for me. I need to look at other alternatives, and investing in the markets is my alternative. But I want to make it clear again, it is just for my risk profile. You may have a different age profile, income profile, and family situation profile. So really make your own decision based on the alternatives that I have set. And if you're keen to invest in the US markets as well, investing in the S&P 500, then I did do a previous video where I suggested the 3 best ways of funding that you can invest in the S&P 500 index.